All right, joining me is Gregg Bell, Chief Business Officer at the HBAR Foundation, who supports the Hedera ecosystem. And I'll be honest, I wasn't overly familiar with HBAR and Hedera until I saw Canary Capital file for an HBAR ETF last November. But I'll tell you, I started to dig in a little bit at that point, and I have found Hedera to be quite interesting. I personally think it's an excellent example of the true building that's occurring in the world of crypto. And so, Greg, it's a pleasure to connect and welcome to the podcast.
Thanks, Nate. Likewise. Excited to be here.
All right, so let's jump right in here. Like I said, I was not overly familiar with HBAR. I'm much more familiar now, but I'm guessing there are still plenty of people who are not familiar. And so I thought, let's take this in pieces. I guess first, just tell us more about the HBAR Foundation itself and how you do help support the Hedera ecosystem.
Sure. So the HBAR Foundation is in many ways the venture arm of Hedera. And so what we try to do is accelerate the adoption of the technology for a variety of use cases, be those individual or enterprise. And so, Hedera really sets itself apart from other blockchain networks in terms of the proven scalability of the network and the fact that Hedera is governed and transactions are validated exclusively by institutions and some of the world's largest institutions, tech giants like Google, IBM, LG, Hitachi, investment banks like Nomura and Shinhan Bank, corporates like Mondelez, and many others. And so it's really a technical application that has proven scalability, more transactions than Bitcoin, Ethereum, and other networks combined. And so it's a really powerful tool to build a variety of different financial and non-financial products.
And let's talk a little bit more about some of those distinguishing factors. And we don't have to get too far in the weeds here. I try to keep things, a little bit higher level. I want to make sure everybody is tracking, they understand the concepts we're talking about. But I will tell you from the TradFi side that a lot of people hear about all of these different blockchains and crypto assets, and they think they're all operating in a very similar fashion. And so give us a little more detail on Hedera specifically in terms of what makes it different and how it really does distinguish itself.
Sure. I agree with that sentiment that you just had in terms of often people are introduced to cryptocurrencies through Bitcoin, and that is the lens by which they view all applications. And the reality is there are several different flavors of this technology. Now, Hedera is powered by a cryptocurrency HBAR, but the Hedera network is used for a wide span of different commercial applications. I highlight commercial applications because in many ways, this is a Intel Inside type of technology. Dell happens to be one of the validators on our network. And before they came out with those famous commercials, a decade or two ago, everybody didn't necessarily know what computer chips were operating within their network. But then they made it very aware. And so, Hedera is utilized by some of the largest corporations in the world for a variety of applications and household name brands. So as an example, Hyundai and Kia, two car manufacturers, utilize Hedera for supply chain tracking within their manufacturing systems. Mondelez, the makers of Oreo cookies and other Ritz crackers and wonderful foods that we consume on a global basis, utilize Hedera for various coupon as well as exploring their supply chain sides. And so there are a variety of different Intel Inside types of applications that are being used, that are using Hedera for this technology. And that's why you see more transactions, about 20 times that of Ethereum, multiples more of transactions than Bitcoin, because there are applications that are distinct from a store of value or a currency alternative, the way that Bitcoin is often perceived.
By the way, before we get too far in here, tell us more about your background. How did you end up with the HBAR Foundation and just getting involved in crypto to begin with?
Yeah, sure. So I have always bridged my career between traditional finance and over the last decade, digital assets and sort of blockchain technology. I began my career on Wall Street as an investment banker and trader in mortgage products and other securitization and fixed income instruments. And so when I was introduced to blockchain technology and to Bitcoin, the lens by which I looked at these assets were through tokenization being a continuation of securitization, being here's a technology that can provide the rails by which commerce occurs and information is shared. And it became really obvious to me that we as a society can write in an email data that can be sent anywhere in any language. Doesn't matter if I'm writing Spanish or English or Russian. You can send it anywhere in the world, and it will be received nearly instantaneously, right? And that's digital information. And when money is digital, you can do that same thing. Yet, in the legacy of Rails that we were all operating over and continue to in many ways, there are so many friction points in that process. And so the ability to have commerce operate in a digital infrastructure is really an exciting one. And so that's where the financial lens by which I've always viewed digital assets and cryptocurrency. And the way I came to actually HBAR Foundation is largely through a role previously that I had at Binance on the US side. And so one of the departments that I oversaw was the asset listings, so the cryptocurrencies that were listed on the exchange. And there is a very robust process by which exchanges review the assets that get listed ultimately on these exchanges, and it includes legal and compliance reviews, but critically a technology review, right? And what I found in looking at thousands of assets that wanted to be listed on the exchange was that there were technical differentiators that began to emerge. And Hedera really stood from a technical perspective in a league of its own in the ability for the network to scale to the needs of a global commerce level. And that's evidenced now by the transactions that have occurred more than any other network that is
So
on a blockchain.
let's talk a little bit more about that in Hedera specifically. And you gave some really nice examples of use cases on the chain earlier, but I'd love to have you offer maybe a few additional real world use cases or even potential use cases moving forward. Because again, coming from the TradFi side, and you know this, one of the common criticisms that we always hear around crypto is what problems are being solved, right? Why does this need to be on chain? And so talk about that from the perspective of Hedera.
So there are a couple different verticals or industry verticals that we feel have real meaningful value propositions for why they should utilize a blockchain technology. And the reality is not every problem in the world should be solved with a specific technology stack. And there's maybe a little bit of a joke like blockchain solves this. Well, no, blockchain doesn't solve everything, but blockchain does do a really good job at solving trust problems, right? How do I transact with another party that maybe I do not know or that I can't meet in a close environment? And so that's enabling that global commerce, global trade. And so you see that in a lot of some of the financial products that are being tokenized, and tokenized being that sort of evolution of securitization. And today on Hedera, you see tokenized products from Aberdeen, the UK's largest asset manager, from Fidelity International through relationships with various broker dealers and exchanges such as Archax, which is a regulated exchange in the UK. And there are things like commodities, diamonds, otherwise that are being tokenized. But why do you tokenize? I think is your point. you are able to automate a variety of components within a transactional layer and make things cheaper, faster, and more secure broadly, right? And so the automation can be in compliance areas, it can be in KYCs, it can be logic statements. Um, the faster is the network and the cost point. So blockchain rails enable the movement of money or value at the speed of the internet, the speed of emails, or maybe even faster than email. And what that does is it changes the way that commerce occurs. Today, most of Americans and most people that are working in corporations, they receive their salaries on a biweekly basis, right? Well, why is that? Why do we get paid biweekly? Why don't we get paid in a different format? Why not immediately? Why not on a weekly basis or daily basis or hourly basis? Well, the cost of doing so is often a big hurdle for how the banking infrastructure moves money around. And of course, when you're talking about transactions of value, it's key that it's not counterfeited, right? That the money that's moving from me to you is not something that is fake. That's one of the problems, the trust solutions that blockchains really solve is ensuring that this digital value transfer is not a forgery, is not a counterfeit. So there's trust in the ability to transfer that money, but then you can do it at increments, at speed that enables new things, new commerce, new structures. And that's the securitization sort of evolution where you can create logic statements. If this, then that occurs, and putting that directly into a product is really powering.
Yeah, and on this topic of the tokenization of real world assets, that's clearly an area that's gaining a lot of traction. I think we both would agree it's still very early here, but we can obviously see the direction of travel longer term. And I'd love to have you just talk more about how Hedera is specifically positioning around that. Does it come down to speed and cost? How do you differentiate when it comes to tokenization?
Yeah, so there's differentiation, I would say, on the technical level, right? One of the challenges with blockchains, and certainly Bitcoin got a lot of attention related to this, is the energy consumption that Bitcoin operates on. But that energy is part of what makes it so secure. Hedera, on a technical level, has a different mechanism, and so it's actually quite energy efficient. It is a global network. And in fact, it actually interacts with some satellites in space as well. So maybe beyond interstellar, if you want to. But the ability to operate a network that consumes the carbon or energy footprint of an apartment in New York or a flat in London on a global basis is effectively what Hedera has. And so there's a significant amount of ESG or sustainability initiatives that have migrated to the network because of this efficiency. The other is scalability, right? A corporation, a builder, a power user all wants to utilize a tool that ultimately can scale to their aspirations. If it's not scalable, if it's not reliable, that foundation, then it's a real problem. And I think that there's been within the Ethereum ecosystem for a number of years questions around scalability. Hedera has that proven scalability in terms of the throughput, the number of transactions that can occur at any point in time, as well as the proven aggregate scalability. And so that's why you see some of these large Fortune 500 companies building applications on Hedera, as well as the ability for any individual in doing so over the last year with 100% uptime at increased at the highest level of transactions. And so many other networks have gone down due to congestion or other components that really are on the technical level saying this technology isn't enterprise grade yet. And that is where I think Hedera really sets itself apart. And that's why you see IBM and Google and Hitachi and Dell and some of these tech giants that are both governing and validating the transactions on the network.
So on this topic, and you just drew some comparisons there between Hedera and say Bitcoin or Ethereum. And as you know, there are a number of quote unquote layer one chains out there. I'd love to hear how you see that playing out from a competitive standpoint longer term, because obviously there's room for multiple chains. I'm not here to suggest one's going to win, right? Multiple chains, that's our future. But I would also say we know not all are going to make it.
Right.
And so how do you see that evolving? How do you see that playing out?
And that's where you see ETF applications for a variety of different, assets, digital assets that are being wrapped in, this in a financial product that is accessible through brokerage accounts and accessible to IRAs and whatnot. There are different benefits to different networks, and certainly there's interoperability. We live in a very interoperable technology environment, and I would expect that to continue. And we're seeing a variety of applications that are leaning into that multi-blockchain interoperability story. Where the differentiation also occurs is largely in, I can take Solana as an example, the fees structure. In many ways, a organization needs to be able to understand and budget for their operations. And that budget is usually largely in dollar-denominated, businesses, right? And so if you are operating on a network that has the fees denominated in their native cryptocurrency, it's very difficult to budget accordingly. And so Hedera has fees that are paid in HBAR, which is the native cryptocurrency of Hedera, but it's denominated in dollars. And so, Boeing can sit there and say, all right, if they know that they are going to build some application that has a specific quantity or cost to it, they can rely on that rather than the fluctuations of their budget that are often at the volatility of cryptocurrencies, which we know is very high. So there's that component. There's also a concept of surge pricing. I think we experience that all probably in Uber and Lyft when we get in a cab. But charging customers more for when there is more transactions. That is a model that may make sense for certain environments. But if you're a business that's trying to do something that's mission critical, or let's just say maybe in the financial perspective, you have a margin call, right? So I've borrowed money from Nate, and now there's been a depreciation of that the asset that I gave you as collateral, and you've issued me a margin call. All right, so I don't want you to liquidate my asset, so I want to meet that margin call. Well, if I can't transfer cash or securities to you because there is a NFT drop or a meme coin that just happened that has nothing to do with the relationship between me and you, that's a really big problem. And it makes it effectively inoperable for the institutional development of this type of relationship. And that simply is not the case with Hedera in terms of, there is no surge pricing. It has proven to operate at greater scale than Solana in terms of in the meme coin craze, and not go down. Networks have gone down or had failed transactions as a result of external factors, and that hasn't been the case. So it's largely, can you rely on the networks to function the way you want to for what might be a very important, mission critical business or personal relationship in terms of the margin call of scenario. And the transferability of securities and transferability of assets and cash with speed and guaranteed throughput and things like that, that's part of the value proposition of why you want to utilize a blockchain network rather than going through a legacy system. But if it's not there, then it's a false promise.
Okay, there is a lot that we can unpack there, and I do want to come back to institutional adoption, but you uttered the magic phrase for me, which is ETFs. And so you cracked open that door. I'm going to barge through here. And I mentioned at the top that there is the Canary HBAR ETF filing. And since that filing, Grayscale filed to list a Hedera ETF. And I'm sure you saw this. The SEC has now acknowledged both of those filings. Doesn't mean anything at this point, but they have acknowledged those filings.
Yes.
Assuming those are approved, and for the record, I think they will be. I don't know anything, but that's my guess, just with the regulatory, the way the regulatory winds have shifted. But
I hope
assuming
so. As
they're
a personal user, I know I would buy some of these products.
well, and so assuming those are approved, what do you think that could mean for Hedera and the broader ecosystem?
Yeah, well, I mean, so in addition to what you just described, NASDAQ has also filed a 19B4 for both of these, I believe. And so, there certainly is some the steps that are being made towards what might be an ultimate, you know, listing or creation of these products. What does it mean? It ETFs are a really effective security structure, right? I think there are over 15, is it trillion, 15 billion? I'm not sure the figure, but it's a significant value of the world of securities that are wrapped in these ETF structures. Pretty sure it's trillion, and there's 20.
I can tell you here in the U.S., it's like around 11 trillion.
11 trillion. So
just in the U.S., much more globally.
It's, between 11 and 15 trillion in ETF wrappers. There are just over, I don't know, what the aggregate volume of Bitcoin and all cryptocurrencies. You're scratching the surface at a couple of 100 million to a billion. And so we're very early in the overall ecosystem here, and what it enables is access. Institutions can access cryptocurrency products without having to onboard to new exchanges, new custody providers, deal with self-custodial wallets. They can do so through their brokerage accounts, and that is a game changer in terms of the ability for a new set of an investor base to access these products. And so that's really exciting from both a corporate perspective, but also from a retirement side, a generation of people that hold wealth in securities that may not have yet participated in a digital asset environment, and now they can. And so that's really an exciting wrapper, and I think that's why we all saw the success of the Bitcoin ETFs.
Yeah, and I think that gets further into the other piece I wanted to touch on, really just the institutional adoption of crypto. And we can talk specifically about Hedera and HBAR. You mentioned earlier, we've touched on this a couple of times, just about how there is a unique governance model with the types of organizations that are involved with Hedera. And I'm just curious, let's say we have an ETF that comes to market, and then you combine that with this governance model and the type of institutions that are involved in the ecosystem. That seems like a pretty good combination to help instill confidence overall. I'd love to have you just expand on that.
Well, this is where I think institutions play a role in society, and certainly within the Hedera ecosystem, in being a trusted counterparty to both other institutions and retail individuals. And so that is the network structure that Hedera has deployed. And I do believe that has helped lead the adoption story for the technology itself, but is also the trust that isn't born solely by a network of individuals globally who are operating nodes, right? Where they could be in regions of the world that are sanctioned. They could be operating in some nefarious activity. Our structure is such that these are institutions that have brand reputation, that have businesses that operate in regions, and there's already a trust relationship, and this is just furthering that. And so, my hope is that that is valued in terms of, as people are introduced to Hedera for the first time and introduced to HBAR, cryptocurrency, for the first time, seeing not just the scalability of the technology and the applications that are being deployed, but the caliber of the institutions that are directly lending their brand reputation, directly governing, and directly validating transactions on the network. And so, I'll take my parents as an example. They still sometimes scratch their heads around, what all these various cryptocurrencies do and why they exist, and whether they are monetary instruments or technology instruments or all of the above. But they know IBM, they know Google, right? They know Mondelez, they know Standard Bank, they know Dell, and so there is the familiarity with these businesses, and it's not just that they know them; they actually have a trusted relationship, and maybe in some cases they probably have equity positions in some. Whether it's through an ETF, a basket, an index, or directly, stock in some of these public companies, so there is a financial relationship as well.
The other piece to institutional adoption, and I would say mainstream adoption overall, as you were just alluding to, is clearly the regulatory side of the equation. And I would say specifically just having regulatory clarity. And I'm curious, just in your role there, and as I think about the HBAR Foundation, how are you navigating the regulatory landscape? And is there anything in particular that you think is needed to help further drive institutional or mainstream adoption?
Well, I think it's of course a network that operates on a global basis, but the U.S. is the global leader in financial markets, and the Trump administration certainly has demonstrated a change of tone as it relates to engaging with blockchain technology and the ecosystems. And so, as a network that was born in 2018, 2019, founded by two individuals that are veterans of the United States Armed Forces, based in Texas. There is there were many difficult decisions over the years to remain operating in the U.S. And we hope that those decisions have been the right ones to continue to build with the mindset of taking a potentially slower paths at time, but ensuring that the network was doing the right things to engage with policymakers, engage with regulators, engage with the financial service providers and ecosystems. And I think that is starting to play out favorably today.
Aside from regulatory clarity, is there anything else that you think needs to happen to help further drive crypto mainstream? And you can talk specifically about Hedera, or just crypto more broadly, but are there other key factors that you're working on or you think are important?
Yeah, so we sort of think about our role as in three sort of pillars. It's growing the awareness of Hedera and of the HBAR, the cryptocurrency that powers Hedera, and why to utilize this network. It's accelerating the access, and it's increasing the commerce that occurs on the network. And so I think in terms of the access and commerce, if we are going to be in a place where cryptocurrencies and HBAR specifically are being used by the next billion people, being used by my parents as an example, the safeguards need to be in place to ensure that there are ways to recover assets, recover value in the event that a password is lost, a seed phrase is lost. There's a lot of friction that exists in the blockchain space with the way that these assets that are digitally bearer certificates, so like the dollars that you hold in your wallet. If someone goes and takes your wallet, it's really hard to recover the dollars that were sitting in your leather wallet. And so when it's digital, it's similar to that. And so ensuring we've been really coming together with other ecosystems within the blockchain space, other networks specifically some of the other US-based networks, to say, how do we collectively create the safeguards? And using the email example again, if you lose your email password, you can go to Yahoo, go to Google, go to Gmail, or get your password back so you can recover your emails. It's not totally lost into perpetuity, and that's needed. Those safeguards are needed, and so that's really one of the areas of focus. And we've been a leader in bringing people together for an alliance within the ecosystems within blockchains to create these types of safeguards.
Before I let you go here, again, just coming back to the HBAR Foundation and Hedera, for developers out there, enterprises, anyone interested in building on Hedera, how can they get involved, and just what does that process look like?
Yeah, so Hedera it's an open source technology. Anybody can build on it. We've actually given the entire code base over to the Linux Foundation. So the largest organization that oversees open source software. And so anybody can come in, look at the technology, geek out in a fun way, build an application, buy some HBAR, interact with the various applications that exist in our infrastructure. And so there's really no barrier to entry other than the decision to say, all right, I'm gonna test this out, try something new.
Well, Gregg, again, just a pleasure connecting. Really appreciate you taking the time. Like I said, as I started doing my own research here, I became more and more intrigued. I think that's the case in a lot of areas of crypto. Once you start going down the rabbit hole, you go a little bit further, but really interesting what's being built here. So thank you for joining me.
Thank you. It's a pleasure, Nate.
That was Gregg Bell, Chief Business Officer at the HBAR Foundation. Hope everyone enjoyed this episode of Crypto Prime. Please leave a review or give us a like wherever you're watching or listening. I always appreciate the support, and I'll see you again next week.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of the investment advisory firm The ETF Store. While OTR Media LLC and the ETF Store are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by the ETF Store. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the potential loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.